We all know Warren Buffett is one of the greatest investors to have ever lived, and he has built his massive wealth to an incredible fortune. His company, Berkshire Hathaway, just disclosed a $4 billion stake. The legendary investors holding company made this surprising huge bet on this chip maker in the third quarter. What does this mean for Buffett and his company? Well, it's safe to say that his vast wealth is built primarily on the stock market, making him one of the most successful investors. And when he executes an idea, it always comes in his favor because his tips, manner, and rules of investing make him different from the majority. Following his lead in terms of investment psychology and strategies, this bet may become a huge win for him and his company. So in today's video, we'll discuss the new stock in which Warren Buffett just invested $4.1 billion in. But before we begin, make sure you like the video and press that subscribe icon. Now, let's get straight to a seemingly exciting fact. Warren Buffett is an investor with a net worth of over $109.5 billion, and he files a 13F filing every quarter revealing the exact thing he's been doing with his portfolio. His most recent 13F, filed a few months ago, has made many investors wonder what is happening. Just recently, his company invested $4.1 billion, and his latest 13F filing backed up his words. But wait, before we go ahead, we understand that some may not know what this 13F filing means. Alright, if you're still wondering, it's more like a filing made by big investors 45 days after the end of a quarter, and this filing reveals their stock portfolio at the end of that quarter. Several big names have this filing, like Charlie Munger and Bill Ackman. Warren Buffett obviously does the same, as he's the main reason for today's video. The shares of Taiwan Semiconductor Manufacturing Company surged around last month after Warren Buffett's Berkshire Hathaway disclosed it had purchased a $4.1 billion stake in one of the world's largest chip makers. Berkshire Hathaway, BRKA, said it acquired about 60 million American depository shares of TSMC in the 3 months that ended September. This was revealed in a filing with the United States Securities and Exchange Commission last month. When this news was revealed, it was pretty surprising because Berkshire doesn't have a history of purchasing chip maker stocks. In fact, this industry has been reporting relatively weak demand from different electronic device manufacturers. But even at this, Buffett and Berkshire find TSMC stock seemingly attractive even when the industry appears to be at a bad time for its industry. One thing to note is that many investors always try to emulate Buffett's success, which can be disastrous to those who do not understand Buffett's concept. So they all need to understand why he specifically likes this stock. So why does Buffett like this stock? We should understand that Warren Buffett is famously known for opposing how some people see him, especially in stock exchange dealing. He always strives to see it from a very strange perspective. He is a contrarian investor who likes to take the long view and always tries to place huge stakes in cyclical businesses while they are in the more depressing portions of their respective business cycles. As we speak, the semiconductor manufacturing company is taking a step back amid relatively soft demand for electronic devices. Let's take this as an example. Just recently, South Korea reported a 29.4% year-over-year drop in semiconductor sales in November. It appears that this manufacturing company may be feeling under the weather. Still, the foundries of Taiwan Semiconductor Manufacturing Company have a lot of merits that keep them high in demand. In fact, it's one of just a few companies that are able to produce chips of just 7 nanometers or 5 nanometers wide. We had earlier stated that the company was taking a step back, but Buffett sees that TSMC reported third quarter sales that soared 48% year over year compared to the 15% of the previous quarter. The advantage of TSMC regarding manufacturing smaller chip designs is on the verge of getting much stronger than it was before. Although delivery challenges with its tool supplier have been on the low regarding its rollout of 3 nanometer technology, it is expected that the company will begin mass producing at this size in the second half of 2023. One of the things that Warren Buffett is doing is that he's simply taking advantage of short-term uncertainty to get into the stocks because, as it stands, there is a lot of shaking and moving as big-name brands continue to reduce their orders. This has made semiconductor businesses slash their profit forecast, which is already leading to increased volatility in stock prices. Now, with the way things are appearing, Warren Buffett is essentially saying that these brands and products may come and go, but as time goes on, semiconductors will be a lot more in demand. Supposedly, this is why he wants to make use of this opportunity to get in on that trend of buying the biggest semiconductor manufacturing company stock at quite a reasonable price for him. Now the big question is, do you think this stock is a smart buy now? All right, this is for the potential investors. We already know about the recent news that Berkshire is now a shareholder, which has helped lift TSMC stock from its 52-week low. However, it still does appear to be more than a bargain at over 40% below the peak it reached in January. So if you're willing to purchase the stock, you can for just 12.8 times forward-looking earnings expectations at recent prices. But one thing to note is that the current earnings multiple of TSMC is appropriate for stocks that grow their bottom lines by a low single-digit percentage every year. If it's not that TSMC was miles ahead of its competitors regarding the idea of making highly advanced chips, its valuation would have made sense. It is evident that chip designers are still beating a path to TSMC's door in order to get them to build their 5nm products. And what's more, they're even super excited about the company's capacity for 3nm production that will start in the year 2023. So regardless of the difficult environment for the semiconductor industry overall, TSMC did report third-quarter net income that rocketed 80% higher. So there are no certainties that it will keep outperforming the competition, but one thing that is for sure is that the company has a clear lead in the lucrative space for tiny chips that looks unquestionable for another 5 years, at least, and even much longer if possible. At recent prices, the American Depository Receipts of TSMC offer a 2.1% dividend yield, and these are fundamentally shares of a foreign business that trade on U.S. exchanges. This means investors will be glad to know the fact that the company hasn't reduced its payout in its own currency since it implemented an all-cash dividend program in 2009. But you should also be mindful because a global recession brought on by soaring interest rates could really make markets drag TSMC down further than it's already fallen this year. So when it comes to investing, you need to be aware of the risks involved too. That the market is currently going down doesn't mean it won't still go down to its dip. In this view, receiving a consistent payout from quarter to quarter will make it even much easier to hang on for the long run and come out miles ahead, which is exactly what Buffett does. To this end, you should always realize the portfolio changes at different times, especially if you're following the 13F. So this means the information you get as a long-term investor could be a wrong signal, and that is why you also need to be very careful when making decisions. Well, that's it for today, guys. Hey, did you enjoy the video? Do well to subscribe to our channel and give this video a like. Thanks for watching, and we'll see you next time.